And I am the owner of the trustisyou.com and a podcast called Stop Paying Capital Gains Now. I want to teach as many U.S. business owners, 1099 income earners, and investors how to save federal taxes. Spendthrift Trust. So few people have ever heard of the Spendthrift Trust. I'm doing these short vignettes and I'm going to go live January 9th, p.m. East Coast time on Zoom, where I'm going to do a presentation and open it up for Q&A. But before then, I want to go over short little minutes and talk about different things. The Spendthrift Trust is legal, copywritten in the IRS tax code 643B, and just comes from England way back when King Henry VIII, the famous king who chopped off his wives' heads, he started the Church of England. When he went to go tax the lords and ladies of England, they went back to the Magna Carta. This is contract law that came from England to the United States while we were still a colony. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023. This trust has been around since before we were a country. The current tax code went into effect in February of 1913. It was only supposed to be around for 6 years. Well, it's now more than 100 years old, and we still have that tax code. The Barron families, the rich families of that time, the Carnegies, the DuPonts, the Rockefellers, the Kennedys, they purposely put this into the IRS tax code 643B. I will never be an accountant or a CPA. I'm dyslexic. I transpose numbers. Not making fun of accountants, but most accountants work in the 300, 400 level of the IRS tax code, and they don't go to law school. There are over a million active attorneys in the United States currently, and only 4% are trust attorneys. A textbook trust attorneys study in law school is called Scott and Asher on Trusts, 5th edition. Again, only 4% of attorneys are trust attorneys. Now, the business trust is for U.S. businesses, 99 income earners. I can legally say you will save 90% on your federal income taxes year after year, generation after generation. If you're in a state like California, Massachusetts, Connecticut, Illinois, Kentucky, New Jersey, you can also save state income taxes. Today, I want to talk about the beneficial trust. The beneficial trust is for all investors. I don't care what kind of U.S. investor you are. You're going to save short-term and long-term capital gains, interest income, dividend income, rental income, and royalties. Today's conversation is going to be about interest income. Most people are not aware of interest income. The interest income is when you are a passive investor, a Forex investor, doing the BRRRR strategy, buy, we do, we sell. When you have notes like I do, where I'm the paper on the house and people pay me their mortgage. When you're doing seller financing, when you're doing subject to, you're going to pay interest income. I'm going to give you examples of actual clients for you right now. My first client saw one of my TikTok videos and contacted me. If you would like to make an appointment with me, all you have to do is go to www.thetrustisyou.com/scheduling to set up an appointment with me. Every video I put out there, I have how you can make an appointment with me. Please do. He saw a video. He sold his company. He was an electrician. He sold his company through a business broker back in 2023. Didn't help him save the capital gains. He's either 50% or 20% when he sold his business. But he saw the video about interest income. So what his deal is, reading off my notes, his deal is for the next 5 years, he's going to be paid twice a year the person who bought his electrical company. Over the next 5 years, because he's got the Spendthrift Trust, he files his taxes, just so you know, income is charged between 10% to 37%, 7 different layers, and there's 4 ways to file your taxes. Single, head of household, filing jointly, or filing separately. He files jointly with his wife. Over the next 5 years, because he started the Spendthrift Trust, we will save him and his family $75,000 when he sold his company. $75,000. So that's, oops, I just hit the wrong button. Forgive me for that. I'm getting my handy dandy calculator out. So $75,000, 75, 1, 2, 3, divide by 5. That's $15,000 per year. He is 68. His wife is 64. This $15,000 is their money. They can pay off their mortgage. They can get a new car. They can help a family member, maybe pay down student loans. They can put this into savings. They can go on a vacation. It's their choice, whatever they want to do. This goes into a new bank account with a new EIN, the employee identification number for the Spendthrift Trust. That's what he's going to do. The second person I'm going to talk about, this is a client of mine. He's had his trust for 2 years. He's doing what's called subject to investing in the United States. Right now, with interest rates so high, he's taking over someone's mortgage. The person, unfortunately, has to move out of the house. He catches them up on the mortgage, and then he sells that mortgage subject to somebody else. I saw his Facebook post back in November. He made $30,400 on the deal. So let's put $30,400. Sorry, I should have had this all done up first. $34,400. I'm going to times that by 0.24 because I know that was his tax rate when he started the trust. He did this deal in November. On his 2023 taxes, when he files them April 15th of 2023, he's going to save an excess $7,296 on this one deal. He's got 5 more subject to deals in the pipes since November. All this money is going to go through his Spendthrift Trust, and he's going to save it. Knowing Brandon, he's going to invest that $7,296 into more subject to deals. He's making a nice empire for him and his family here in the United States. He knows how much this trust is saving him every year. My third client that I'm going to talk about, again, he saw a YouTube video about interest income. I did not help him save money when he sold his business. I have to apologize for that. He should have talked to his business owner. He should have known about this. So for the next 3 years, they are going to be paid $100,000 in seller financing, or $300,000. So let me put this in there. 300,000, 1, 2, 3, divide by 3. So he's going to be paid $100,000. I didn't have to do the calculator. He's going to be paid $100,000 a year doing this. With the Spendthrift Trust, we are going to save them over $72,000 over the next 3 years. Again, he is 69. His wife is 68. So saving $72,000 divided by 3 every year, we are going to save him $24,000. That money he's saving, he can use any which way he likes. When he saw my YouTube video and he contacted me, he's just like, that's a lot of savings. We sold our business. This is all the money we have for our retirement and what they're going to get from Social Security. An extra $24,000 over the next 3 years, or an extra $72,000 over the next 3 years, that's life-changing. That's 5 figures life-changing for him and his wife. If you would like to set up an appointment with me, please go out to www.thetrustisyou.com/scheduling. You can set up a 30-minute tax breakthrough session with me. I will send you 3 articles from Forbes. I will send you 2 pages of case law to give to your tax preparer or to give to your financial advisor. I will give you the book, What the Rockefellers Do. I will give you a PDF copy of that. January 9th at 4 p.m. East Coast time, I am going live to do Save Federal Taxes Legally. It's going to be on Zoom. It's going to be a presentation and then open up for Q&A. Please reach out to me. This is as legal can be. I want to help as many U.S. business owners, 1099 income earners, and investors save federal taxes legally. Thank you for watching. Have a beautiful weekend. Take care.